Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Tony Zhang, Chief Strategist at OptionsPlay for a review of the Nordics markets and options strategies to trade the trends. Tony, it's great to see you as always. Welcome back to Trade Talks.
Thank you so much. Thank you for having me back. Looking forward to talk a little bit about the updates that we're starting to see from the Nordic markets.
Yeah, and Tony, of course, the question is, are rising interest rates a concern for the Nordic equity markets? Because it seems like everyone else is asking that around the world. So let's review the four markets.
Yeah, exactly. So like I said, I think what's at top of mind for many investors, not just here in the US, but globally, has been the rise in interest rates. And if we look at the Swedish 10-year yields, what's interesting about this is that the Swedish yields have largely been almost just around zero or slightly negative for all of 2020, but we've seen a significant uptick in Swedish 10-year yields over the past month and a half here, where it crossed above 0% in the beginning of the year, and now is trading at 36 basis points. So one of the sharpest rallies we've seen in interest rates across the board for Swedish bonds. So this has put a bit of a pause here on a lot of equity markets, because the equity valuations that we see across the board are very rich. And when you compare them to treasury yields or to risk-free yields, they are becoming far less and less attractive as risk-free yields start to rise. So when we look at the equity markets, we start by looking at the OMXS30, the Stockholm index. This is one of the stronger equity indices so far, still continuing to grind higher. We do see some levels of exhaustion, some signs of equity markets being overbought, but largely Stockholm's still relatively strong market as it stays above that 2000 level here on the OMXS30. And then when we pivot over here to the OMXC25, the Copenhagen 25, this was by far the strongest equity markets out of the four Nordic markets. But over the past two and a half months, this is a segment of the Nordics that is starting to lose relative strength. It has made multiple attempts at that 1600 support level on this index, and has failed to really break significantly higher from that level. So it is at risk of potentially breaking lower and actually turning south here. So there are some equities that are starting to look a little weaker, especially the higher growth sectors like Copenhagen. And then when you look at Helsinki, it's kind of in that middle between Stockholm and Helsinki, where it's showing a little bit of strength here, but losing a lot of that momentum here over the past month. And then when we move over to Oslo, the last one of the four, Norway, obviously being a oil producer and oil and gas producer, is actually the strongest of these few equity markets, as oil prices continue to climb on stronger demand and also constrained supply that we're starting to see. Oslo is actually right back around the $900 resistance level. So this is a very important level to pay attention to. So the weakest market of the four, Oslo, actually is starting to become one of the strongest here. So a lot of rotation that we're starting to see here in the equity markets, and the rise in interest rates is causing some of this rotation away from growth towards more value-based and then lower valuation type equities.
And how about economic data? Services has been up and down while manufacturing recovered nicely from the pandemic lows, although it took a dip this past month. What's going on there?
Yeah, exactly. So manufacturing has been the driver of economic growth, not only in the US, but also, as you can see here in Sweden, taking a bit of a pullback here, but that's okay because we saw a very strong December month here in Sweden. But the one metric that we're really paying more attention to is on the services side. The services side has been the side that has been lagging behind in terms of economic recovery. We're starting to see services recover back again, printing as the highest value we've seen in the past 12 months. So when you see services join the manufacturing recovery, this is really the economic recovery, or the data behind the economic recovery that we're looking for, which also explains to some degree the rise in interest rates. As the economics improve, you typically see selling off of those risk-free assets in those government bonds, in addition to the inflation expectations that some investors have, that is causing some of the sell-off we're seeing in those risk-free bonds.
And turning to the strategies to trade the trends, last month we focused on housing and paper. For February, we're looking at communications and retail. Let's start with communications.
Yeah, so by far communications is still one of the dominant and strongest sectors here, not just in the Nordics, but globally. And a lot of this is tied to the need to build 5G communications going forward, especially with Ericsson, one of the strong contenders in this particular space. What's interesting about this particular stock is it recently tried to break out above that 105, 106, 110 level here to new all-time highs just a few weeks ago, but has failed and pulled back pretty heavily back into that support level around 102, 103. And this is the opportunity that I see for investors who are looking to see a little longer term exposure to some of these names by using a debit spread here. I'm going out to April and I'm buying the 102.5, 115 call spread. Using a debit spread like this, especially when markets are near all-time highs, is a great way to reduce your risk. With this type of debit spread, I'm only risking 3% of the stock's value to play for a further breakout here on Ericsson. And if this trade doesn't work out, you're risking only 3%. And that's a great way for investors who are concerned about stepping into long equities at all-time highs and rich valuations to be able to protect some of that downside.
And moving along to H&M for the retail trade, a little bit of nostalgia there as H&M and Nasdaq were on the same block in the heart of Times Square, New York City. So what are you taking a look at there?
Yeah, exactly. H&M seeing actually some pretty strong retail sales coming out of H&M. Actually, the stock breaking out to new relative highs, new 52-week highs just today. So what we're playing here is for that breakout. But again, with retail stocks at all-time highs and fairly extended valuations, it's always tough to for investors to seek new long exposure at new all-time highs, which is why, again, I'm using a debit spread structure similar to the previous trade where I'm going out to April. I'm looking at the 200, 220 call spread, looking for about a 10% move to the upside, risking here, again, only about a little under 3% of the stock's value to play for that breakout. So if it fails, like the last breakout we saw here in Ericsson, investors are protected by risking only about 2.5% of the stock value on a trade like this.
All right. And finally, how can Nordic investors get in touch with you?
Yeah, so we have a fantastic partnership, and we have the ability for anyone who's viewing here to sign up for a free 30-day trial to the tools that I'm showing you here today. You can sign up for that at trade.optionsplay.com/trade talks.
All right, Tony, great insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.